Okay, Charles, I'll get started. Welcome everybody to another webinar in the Red Into Black series. Those that have been to our previous webinars, we welcome you back, and this might be the first time. Welcome. It's a very short webinar that we'll be hosting today. They generally last for about 30 minutes. There's a time for questions at the end. You'll see at the bottom of the screen there's a Q&A function, and we welcome you to use that Q&A function to ask any questions, but we will ask them at the end of the presentation itself. I'm Stephen Michelle. I'm a Director of PCI Partners, Liquidator and Trustee in Bankruptcy, and we welcome you today to the webinar. Today we're lucky to have Charles Bavan, who's going to talk a bit about how to deal with the tax office. He's got a huge amount of experience in dealing with the tax office. He's had 30 years experience in commercial litigation, insolvency and dispute resolution. He's the head of the insolvency team at Hunt & Hunt in New South Wales. Charles was instrumental in the appointment of Hunt & Hunt panel of the ATO in 2005 as a lead partner for that client nationally for 15 years. During this period of time, Charles has acted in over 12,000 matters for the ATO debt recovery team. So I'm sure you'll appreciate that Charles has got a wealth of experience in dealing with issues relating to debt owed by the ATO. In addition to that, he's been dealing with winding up proceedings, application for claims petitions, and defending debt, including proceedings for recovery of DPN debts. So Charles has a unique perspective of the manner in which the ATO conducts its debt recovery practices and how it approaches that process. So welcome, Charles. Thank you very much for joining us today in the Red Into Black webinar series.
Thanks.
One of the questions which I've got for you is, how does the ATO differ from other commercial creditors?
Look, I think there's a couple of bases upon which the ATO can be distinguished from a commercial creditor. Firstly, as you alluded to there, having done 12,000 ATO matters over a period of time, one can gather from that that the ATO is obviously, to most, I think, the largest unsecured creditor that exists. So most people have dealings with the ATO over a period of time. The most distinguishing factor, I think, is this, and that's that too often during negotiations with taxpayers, the taxpayers will offer a compromised amount to the ATO to satisfy its tax liabilities. Commercial creditors might be interested in that, in the sense that if they could be convinced that accepting something less than the full amount is more than they'll get if the company is wound up or an individual is made bankrupt, for a commercial creditor, that might be attractive. For the ATO, it's not. Accepting less than 100% of what's owed, in the ATO's view, and logically, actually gives a benefit to those taxpayers who don't meet their tax liabilities on time over those that do. And for obvious reasons, the ATO wouldn't do that. Further than that, the ATO actually has a statutory power, and this is in the schedule to the Taxation Administration Act. It has a statutory power to agree to permit the payment of a tax liability by instalments. It also has a statutory power in the schedule to defer the time when a tax liability is payable. What it doesn't have in the schedule is the ability to accept less than the full amount of the tax liability. So that's the most distinguishing factor, I think, from the ATO vis-a-vis a commercial creditor. Secondly, the ATO has, although for the most part it's an unsecured creditor, like most commercial creditors will be, it does have some additional powers and remedies that aren't available to ordinary unsecured creditors. Some examples, sorry.
Yes, so talking about that, what sort of What sort of actions can the ATO actually take to try and collect and recover some of these debts?
Well, they have certain powers which ordinary creditors don't have. They also have some which all creditors have. To assist them in recovery of debts, they have conclusive and prima facie evidence provisions in the legislation, which allows them to more easily prove their debts, which is effective in the recovery process. They also have the ability to issue estimates, which creditors can't. In fact, they can proceed to recover estimates as if they were substantiated debts. Like ordinary creditors, they can issue the equivalent of a garnishee notice. They also have powers to issue director penalty notices to recover company debts from directors personally, as well as courses the formal recovery processes of bankruptcy and winding up proceedings.
So let's go through some of those actions that the ATO can take, probably the more common ones. You know, one of the ones that a lot of people that we speak to that have got issues relating to the tax office, they might receive, for example, a DPN. You know, there's lockdown DPNs and non-lockdown DPNs. What's a non-lockdown DPN?
All right, well, just to go back one step, I suppose, a director penalty notice is issued to a company director when a company doesn't do certain things in relation to the company's taxation liabilities. A non-lockdown DPN is a director penalty notice that's issued to a company director where the company has reported its obligations within the time periods permitted, but has not paid the liabilities arising from those lodgements. In that case, the directors have the ability to obviously pay the debt, but they have the ability to remit the penalty by beginning to wind up the company, appointing an administrator, and now, much more recently, of course, by appointing a small business restructuring practitioner. So those steps are available to a director who gets a non-lockdown DPN, and if they take one of those actions, then the penalty will be remitted. So
the penalty is, when you say remitted, so the penalty is actually by taking those steps, you get a remission from that.
That's correct. The director will not be liable under that penalty, and it won't be recovered by the ATO as a penalty from the director.
What sort of period of time is involved in that?
Well, director penalty notices give you 21 days from the date it's served on you to take those steps.
Right, okay. And then with the lockdown DPN, they seem to be far harsher in my view, but how do they work?
Right, okay. Well, as you know, lockdown's a pretty common word at the moment, and it, you know, even in the sense where it's used with the COVID, of course, it's not a good thing, and a lockdown DPN is also not a good thing. So if the company fails to lodge, that is, report its obligations in relation to BAS or PAYG withholdings or super, if it fails to lodge, that is, report the returns in the required periods, then the debt is locked down on the director. And that means that during the 21-day period, the director is unable to remit the penalty by taking those actions that were available for non-lockdown DPN. That is the appointment of an administrator, begin to get the company, for the company to be wound up, or to appoint a restructuring practitioner. Those are no longer available, and the only way that the director can, in effect, get out of the penalty is to pay it. Not that that gets him out of it, but serious consequences when you don't lodge, consequences if you don't pay, but the lesson to be learned is do your lodgements by the time they're due. Otherwise, that penalty is locked down on the director.
So sometimes we get a situation where company may have gone into liquidation, but the director subsequently gets a director penalty notice. Can you offer any comments in relation to that?
Yeah, well, that will obviously be a lockdown director penalty notice. And bear in mind that what is being sought by the ATO on a director penalty notice is a liability which runs with parallel with the company's liability. So the company's got the liability. Let's take GST for an example. The company has a liability to the ATO once it collects the GST or the net GST to remit that to the ATO. If it doesn't do so, the company's liable for that debt, and indeed the ATO could take proceedings to wind up that company for the GST liability debt. If it's a lockdown DPN that's been served on the director, then the mere fact that the company's been wound up doesn't remit the penalty. Any dividend that may be received by the ATO in the winding up process will reduce the liability of the director, but unless 100% of the debt is obtained in the winding up process, the director will remain liable for the balance of the debt.
I understand with superannuation, they may not pay the superannuation, but I think there's form isn't there that they should be lodging if they, which they need to do within 28 days of becoming due. Can you comment about that one? Are you aware of that?
Sorry, I missed the question. So
yeah, just to report superannuation. I think there's a form that needs to be completed, I think, to notify the ATO of the super debt.
Yeah, that's right. So you've got 1 month and 28 days after the end of the quarter to which the superannuation relates to lodge your return.
Yeah.
And that's the period that's given to you under both DPNs that allows you to lodge it from. So if you haven't lodged within that time and you get a DPN, it'll be a lockdown DPN.
Okay.
Bearing in mind, DPNs relate to PAYG, GST and SGC. So you may get a lockdown in relation to one and a non-lockdown in relation to another, depending on whether you've lodged some forms but not the others.
Another step tax office can take that you mentioned were garnishees. So how does that work? Who gets the garnishee notice and what actually happens there?
Yeah, look, all creditors have the right to issue garnishee notices. The great difference between the ATO's power, it's actually a Section 260 notice rather than a garnishee notice. The legislation doesn't refer to it as a garnishee notice, although the effect of it is the same. And what it is a notice issued by the ATO to another entity who owes money to the taxpayer. I say owes, it doesn't have to be owed and payable, it only has to be owed. And the ATO can serve that notice on the third party, requiring the third party to pay the ATO the money that they would owe the taxpayer. One of the major differences with the ATO's Section 260 notice, as opposed to a garnishee or notice, is that a creditor, an ordinary creditor, is required to have a court judgment for the debt before they can issue a garnishee notice. The ATO doesn't have to have a judgment. It's entitled to issue a Section 260 notice, whether or not it has a judgment. It's only if there is a debt payable to the ATO. That's a powerful tool for the ATO in its debt collecting process.
So the 260 might be issued on the company's debtors. What about the company's bank and bank account?
Yeah, so trade debt is obviously a bank account that the taxpayer has in its name. If the ATO is aware, for example, that a taxpayer is selling a property, then the notice can be served on the purchaser of the property.
Right, okay.
So that at the settlement, whenever that may take place, the purchase monies can be paid to the ATO rather than to the vendor of the property. So as I say, it's any entity that owes money. It can even be served on an entity that doesn't owe the money at the moment. So it could be subject to some condition occurring, and the notice can be served, and the debt becomes payable to the ATO when that condition's fulfilled.
Oh, okay. So let's say the ATO is, maybe they haven't done any of those steps, but they've decided to go down maybe the formal insolvency route. What steps can they take against companies, and then subsequently, obviously, what steps can they take against individuals to try and recover those debts?
Right. Well, look, the ATO will rarely go to a formal action, and by formal action, I mean a bankruptcy proceedings against a individual, or winding up proceedings against a company, without first trying to have its debt paid. And it will take, what was it'll take? The ATO won't take those steps unless it's really tried to have its debt paid by negotiations or some other means prior to taking those steps. I mean, obviously, in relation to a bankruptcy notice, the ATO first has to get a judgment against the taxpayer, go through the court proceedings or get a default judgment. Once it's got the judgment, it's in a position to issue the bankruptcy notice if a judgment isn't satisfied. It would be very rare for the ATO not to attempt to have the judgment paid or otherwise negotiated before issuing a bankruptcy notice. In the case of a winding up, of course, the ATO will issue a statutory demand first in order to obtain the presumption of insolvency. If that demand is not complied with, and only then will it proceed to the winding up proceedings. Of course, if even at that stage the taxpayer doesn't negotiate or pay the debt.
So, given that you may have this negotiation with the tax office, what, in your view, given the number of matters that you've been involved in, what is the best way, say, engaging with the tax office, say, before these, and then maybe if you can just comment maybe about the best way of engaging with the tax office maybe after one of these steps has been taken?
Yeah, look, the best way to engage with the tax office is to get in early. Okay, the further along the process the ATO goes in the debt collecting process, and that extends all the way through to the final bankruptcy or winding up, the harder it is to negotiate an outcome with the ATO. If you get in early, that is, and by early I mean get in first, before the ATO takes any action to recover debts from you, any taxpayer is far better off approaching the ATO, explaining the difficulty you're having with paying your debt on time, seeking an extension, or trying to negotiate a payment by instalments. As I've said, both those two things the ATO can look at. They're given statutory power in the debt collecting process to look at your circumstances and provide you with those two forms of relief. So getting in early is the most important thing to do, because that shows the ATO that you wish to engage with them. And if there's one thing the ATO doesn't like, it's someone who's not engaging with them in relation to their tax liabilities.
Yeah. When you're negotiating say a payment plan, for example, or a payment by instalments, what sort of things do the tax office look for? What sort of what can the taxpayer expect, I suppose, in terms of trying to be successful in getting that instalment arrangement? What sort of things do they need to show?
Okay, well, it's best to communicate with the ATO. Okay. As far as the ATO is concerned, a debtor who communicates is one who's opted into the system. If the ATO can't get hold of you when your debts are due and payable, they take the view that you're opting out of the system. And if you don't want to be part of the system, the ATO will take you out of the system. So it's important to communicate with the ATO. When you're negotiating a payment arrangement must be for all your tax liabilities. So the ATO may have commenced proceedings against you. They may have got a judgment against you for a debt, but you owe other taxation liabilities to the ATO, as well as the debt that's been the subject of formal recovery proceedings. If you're going to enter into a payment arrangement, the ATO won't want that to cover just the debt, the subject of the current proceedings or the current winding up or the current bankruptcy, whatever it may be. They want it to cover all your outstanding liabilities. So in order for them to assess what that is, all of your your tax lodgements must be up to date. Otherwise, they won't know what the liability is. So before you approach the ATO or as part of any negotiation process, make it a part of the offer that your lodgements will be brought up to date by a certain date if they're not already. Ideally, you'll have them up to date before you approach the ATO, but it must be part of any plan that you put to them. It also doesn't hurt to have your financial records up to date. The ATO is probably likely to ask you for them in any event because they do their own business viability assessment. You may have heard of it, BVAT, which is a business viability assessment test. And they test your ability to meet the payment arrangement that you're offering, because they want to make sure not only that you can meet it, but also that it's the best you can do. If you can, by your financial records, if it's demonstrated that you can pay $5,000 a month towards a tax debt and you only offer $2,000 a month, the ATO is likely to reject it. If the ATO will also probably likely to reject a payment proposal which they don't think you can meet. It's in no one's interest to put forward a payment plan that's not going to be able to be complied with. Certainly the ATO looks at repeat offenders, that is payment plans that have been accepted but then default. It's obviously much harder then for you to be granted another payment plan when you've defaulted on previous, and records are obviously kept of what payment plans have been granted and whether they've defaulted. So if you're going to offer a plan, make sure you can comply with it.
Do this treat the different components of tax outstanding differently? So, for example, GST, PAYG, and super, do they have any sort of preferences to how the payment plan is structured in relation to those particular debts?
Look, they normally will want the super debt to be paid first, or maybe the PAYG, and it's logical why that is, of course, because to a degree, employees are collecting tax or collecting super on behalf of employees and remitting it to the ATO. So if those are behind, employees are suffering, not just the ATO not getting revenue, but it affects the employees. So the ATO gives priority to those debts. And if you enter into a payment plan, you'll often find, most of the time, I think you'll find that the ATO will allocate the first payments received to the superannuation debt.
Sure. So one of the things that the government is on the 1st of January was the small business restructuring proposal system that not too many businesses have availed themselves to that age. So for those who don't know, it's basically for businesses that have got debts of less than $1 million. that have got substantially complied and lodged tax lodgements and don't have any outstanding employee entitlements, which would include, in the 12 months that we would do, superannuation. So a proposal to creditors to vote upon to effectively accept a plan, which is generally, I think, a proposal to accept a payment over a period of time of no more than 3 years. So given that major creditors that we always come across in the small business space is the ATO, how do you think will deal with those sorts of plans that are put forward?
Yeah, obviously it's a bit of guesswork at the moment, isn't it? Because not many of these have gone through. In fact, I think there was a case in Victoria yesterday in the Supreme Court with the court being asked to decide whether or not it was in the interests of creditors for the plan to go ahead. Now, that's obviously in the context where a winding up application was already on foot. Look, this the best I think we can say is and compare it to how the ATO approaches deeds of company arrangement in the administration process and how they approach DOCA proposals to get an inkling of how they might look at a restructuring plan. Now, certain matters seem to repeat themselves on DOCA proposals, which the ATO didn't look favourably on. At the end of the day, the test is the same. Is it in the interests of creditors for, and I'm looking at it here in the context of when there's a winding up proceeding already on foot. Is it in the creditor's interest to accept the plan? Well, more's involved for the ATO than just what's the return. Certain matters were present in DOCAs which the ATO didn't like. And it's fair to say that a lot of those have been eliminated from the small business restructuring plan proposals. So, for example, repeat offenders won't be proposing restructuring plan after restructuring plan after restructuring plan because they're just not permitted to do it. The tax lodgements all have to be up to date. Well, for a DOCA proposal, that's not the case. And the ATO didn't like considering DOCA proposals when they didn't really know what their whole debt was. Also, importantly, I think that with the restructuring plan, related party creditors don't vote. So DOCA proposals where related parties would carry the vote, obviously the ATO would look very carefully at whether or not it was in the interests of creditors or whether it's in the interests of related party creditors who more often than not weren't even going to prove for their debts on a DOCA proposal. So indeed, with only a majority in value of creditors being required for a restructuring plan, that's more often than not going to be in the ATO's favour as well, I think. Often they'll be the largest creditor and may even carry the vote. So those matters have all been taken away, if you like, from things that the ATO would be a bit sceptical about on a DOCA proposal. So I think the ATO will certainly initially be prepared to give due consideration to these proposals. I don't think they're going to reject them all out of hand simply because their debts have been compromised. I mean, the statute allows debts to be compromised, and the ATO is no different from any other creditor in this position. So I think they'll look at it, having just said they're not a commercial creditor, I think they'll look at it commercially. And certainly if they think that business can continue on and continue to contribute buy the plan, I think they'll probably give it due consideration.
Well, Tom will tell us that.
Yeah.
But yes, I do agree. I think they're probably going to be the major creditor in all of these, and we'll probably carry the vote in respect.
Yeah, and I think Stephen will be acutely aware of that. Certainly, if it's the one vote that's going to carry the plan, and there's any number of trade creditors or whatever it might be there as well, I think the ATO will have their interests at heart as well as their own, given that plan consideration.
Indeed. We're getting very close to the end of time, so any sort of final tips on engaging with the ATO you want to raise?
Look, don't treat the ATO as your enemy. Commonly called the fiscal fiend and whatever else that Mr. Klein used to call him. But you will find the ATO is actually quite accommodating if you do the right thing by it. It understands that in business, people are going to have difficulties paying their tax. It understands that circumstances change for a lot of people for any number of reasons, some of which are under your control, some of which aren't. But if you genuinely wish to enter into negotiations with the ATO because you have trouble paying all your debts when they're due, you will find that the ATO is actually quite accommodating to you. Just do the right thing by it, and the ATO will do the right thing by you.
I think that's good advice. Thank you very much. We've got a couple of questions. If you've got questions, please ask them now. Chris, I might hand over you to questions.
Okay. First of all, from Cam Rivington, Charles, please confirm the ATO can still issue notice on super funds so that money owed to the ATO will be paid when condition of release occurs, maybe 30 years in the future.
Sorry, Chris, I think you were breaking up a bit there.
I'm sorry about that. Charles, please confirm that the ATO can still issue notice on super funds so that money owed will be paid when condition of release occurs, maybe 30 years in the future.
I'm not sure what you mean by condition of release there, and in what context that question arises. Can whoever asked that question perhaps just email me the context of that and exactly what you're meaning by it, because I'm just a little, we won't take up time today doing it, but I'm happy to address that, but I'm just not sure of the context in which that's been asked.
Another question from Cam also is, and how does ATO account for these in its debt collection stats, cash basis or accrual basis?
In the ATO's?
Yes, in their collection statistics.
They account on a cash basis. If you're talking about their annual reports and how much cash they collect and that sort of thing, well, they work on a cash basis, not on an accrual basis. So I think I had the figure in my head, which I've now forgotten, but I mean, the amount of tax that the ATO collect, as everyone would be aware, is an astonishing figure. The amount of tax that's outstanding and overdue is equally astounding. It is an enormous amount of money that is overdue in the sense of not paid by its due date. But the ATO work on a cash basis, my understanding anyway.
So from Cam as well, taxpayer owes money to ATO will do. Charles, again, I'm not quite sure.
I don't think that's a question, Cam. But
Yeah, might have to email Charles direct on those.
Yeah.
Any others, Chris?
Okay. In fact, also, this is an explanation from Cam. ATO issues notice to taxpayers super fund, so money can be paid to ATO when condition of release applies.
Yeah, well, I think that must be relating to the first question, but Cam, I'm sorry, I just don't understand the context of the question.
Perhaps it's a context of the Section 260 notice. So that a 260 notice is served on the superannuation fund. Is that correct?
What, because the superannuation fund owes the taxpayer money? Well, the superannuation fund doesn't owe the taxpayer money. A superannuation trustee is not a creditor of the taxpayer, of course. He holds his money on trust, and it's not for the taxpayer, so it's not money owing to the taxpayer. If the question was, can I do it now, so when he hits age 60 and stops working, or when he hits age 65, the super fund then pays the money to the ATO. The answer to that could well be yes. The ATO is not going to do it 30 years in advance, though, I wouldn't have thought. I had to think about that. There might be some provision about super funds. It's protected, of course, in a bankruptcy scenario, and it may well be a similar provision about that under the tax legislation, but I'm unaware of it. But like for like in the bankruptcy scenario, it may be that super funds are protected. I'd have to look at that.
Yeah, it's quite a good question. What other question you got there, Chris?
That is all of the questions that I have. So if there are any more, please ask them now, just on the Q&A section.
Okay.
There needs to be no more, I think, at the moment.
So if there's no more questions, thank you once again, Charles, for sharing knowledge in this area with the audience today. We fully appreciate your time and giving up your time to attend our webinar. For everybody out there, obviously Charles in New South Wales, highly experienced in this area, and would be happy if you reached out to him in relation to any questions that you might have that may have arisen out of this. And of course, any insolvency issues that arise, we're also happy to assist with that, and please don't hesitate to give us a call. Thank you very much for attending and giving your time today to attend this webinar, and in a couple of weeks' time we'll have another one, and it's going to be on the small business restructuring process. So we welcome you to that particular one. Everyone have a good afternoon, and thanks again, Charles.
Please do.
Yes.